National Bank. I left a flyer on most of your tables. I do physician mortgages. What differentiates that from a conventional mortgage is down payment and things like that. I'm going to be the shortest speaker only because these are conversations that we have individually, because your credit score is different than your credit score, different than your down payment, different than your income. So if you're looking to buy a house, refinance, or anything like that, that's what I do. I've done that for the last 16 years. I'm based out of Columbus, Ohio. Our footprint is Michigan, Illinois, Pennsylvania. We do New Jersey, Florida, all of the Midwest, and then we do exceptions for all 50 states. So if you're going to California, Texas, somewhere like that, also, get with me. Let's find out what your loan to value is, your credit score. We'll throw some numbers out at you too. So Huntington National Bank is the actual lender. We do the underwriting. We were founded in 1847. My branch is the Ohio State University and the James Cancer Hospital. So we actually have a branch in the hospital. We do residents, fellows, attending, and what we do different is, especially for residents and fellows coming out of or going into your first contract, you may not have a 2-year job history. You may not have 20% down to avoid private mortgage insurance or PMI. You may not get the terms and conditions that other people get at 0% down. Starting with the basics on conventional loans. So you have Fannie Mae, Freddie Mac, FHA, VA. A lot of you probably have heard the lingo, and half of it's just getting through the language of a mortgage. But if you're going to do FHA is 3% down or more, VA is 100% financing, so if you're a veteran, you get the same terms as a physician product. However, you have to finance in a upfront mortgage insurance premium with VA, which is usually 1.75% of the purchase price. So you still get perks on a doctor loan that you cannot get with VA. You have to be an MD or DO to get it, by the way, on that. Zero down up to $750,000. $750,000 and $1.25 million is 5% down. And you guys get the same or better interest rates than anybody else putting 20% down on a non-jumbo loan, which is $484,000 or less. There's no points. What are points? A lot of banks will advertise. You go to their website, VOA, Huntington, Fifth Third, whoever, and it'll say 3.25%. Wow, that's the best rate out there. I've been doing due diligence, I'm Googling, I'm looking online, I'm talking to friends, but then there's a little asterisk that says one origination, a half discount. And that's 1.5 points of the loan amount to buy that rate down to that point. So is it worth getting 3.25 versus, with 1.5 points versus 3.5? We'll do that math to see when you're going to recoup that loss. A lot of times it's not worth paying points, but again, depending on your loan amount. Student loan calculator. So if you have $250,000 in student loans, a lot of people won't give you a loan because your debt to income ratio. We use a student loan calculator based off your income and how many people are in the household. So it's very forgiving as far as the student loan calculator. Gift funds are allowed. So again, I'm a dad with 3 daughters, and I put all 3 through college. They were 4 years apart. I get that. But I'll also probably be co-signing for a lot of my kids for their first houses or whatever. So you're allowed a parent or a non-occupant co-borrower to co-sign for you. That happens more than you think. 2 months reserves and closing costs. So even though you can get a 0% down loan, you're still going to have fees. So whether the seller pays your closing costs, whether you pay your closing costs, there's also fees on top of a mortgage, even if you're putting no money down. Philadelphia has 2% transfer taxes, seller paid and buyer paid. Now, again, if you have a good realtor, they can negotiate the seller paying all of that, but if you get your best price on the house and you don't get any closing costs paid, you're going to have 2% transfer taxes, which are 2% of the loan amount. So if your loan amount's $200,000, that's a pretty big fee. You're also going to have 1-year homeowners insurance and about 6 months of property taxes. Now, fortunately, Philadelphia has a lot of tax-abated properties, so at $250,000 on a loan amount with no money down and a tax-abated property, your payment's $1,200. So I don't know what you guys are paying rent. You pay more than $1,200 a month in rent? A lot of you? Yeah. Anybody buying a house in the next 5 years? 5, 6, nice. Philadelphia's hot right now. We're doing, Jay and I, we were talking about this not too long ago. We had some clients, 5 and 6 years ago, that they did purchases, and now after residency, they're ready to move on, and they've got 20% equity or more in their property. So they either keep it for an investment property, or they sell it, and now they've got a down payment, or they've got more money to put on the next house. Whereas somebody that rented for 5 years, where's that money? It's gone. Now, I can't tell you whether to buy a house or not. That's probably for a financial advisor, your parents, your friends to talk about. But again, the market here is incredible. We do allow exceptions. So credit score, typically we like to see a 680 or above. If it's a 670, a 660, 650s, do we allow them? We will look at everything on an exception basis. It's going to depend on anything else, like your debt-to-income ratio, do you have reserves, where are you at in your career, things like that. But it's still obtainable. But if you're 640, 650, you might want to look at that first before you apply for a house. You really should be a 700 or above to get the best interest rates out there.